oftentimes I will get a call from a business manager or a GM, sometimes the owner, saying, hey, we've got a project coming on and we're going to be spending a bit of money. And, do we need to capitalize that? Are we able to just expense it and write it off? And a conversation will ensue. And what typically happens is I'll first say, well, what do you want to do? Do you want to expense it? Do you want to capitalize it? And see what they're thinking. And most of the time, the answer goes as follows. Well, we really would like our P&L to look okay, but we'd like to maximize on our tax benefit from this. And so one of the things that we need to think about when we talk about capitalizing or expensing of fixed assets is that a few years back, the IRS came out with some rules and they established a minimum threshold where we can have a capitalization policy in place, and anything under $2,500 we can write off without question. And that's if the company doesn't have what we call applicable financial statements, which would be an audit. So let's say you got a CPA that's auditing your financial statements. And if you do, we could bump that number up to $5,000. Without question, we can write that off. The catch is that if we do that, you're going to have to keep the same treatment for your financial statements as you do on the tax return. But there's another way to look at things. And sometimes maybe you've got a project going on in your service department or out in a parking structure somewhere, and you're thinking, I really don't want to expense this for financial statement purposes, but I'd like to write off as much as I can for tax. And so what we look at is what we're buying, what we're placing in service, the unit of property, is that a betterment, an adaptation, or a restoration? And in that case, if we're not looking at it from a dollar amount, but we're looking at it more from really what is this particular item that we're doing, that there's a chance that for financial statement purposes, we could capitalize that as a new parking structure or a new, fixed asset. Maybe we got a re-imaging program that's happening and we've got a bunch of assets we're putting on the books. But for tax purposes, under the tax code, we may say, no, it's not a betterment. No, it's not an adaptation. We're not restoring anything, as the tax law says, and we may be able to take an immediate write-off in the current year. Now, the key is this needs to be a conversation that's had.